Hi guys, welcome to Riti Trade Hub. This channel explores the world of Forex. My name is Purity Godfrey. I am a professional Forex trader and I officially welcome you to Riti Trade Hub Forex Beginners course. On today's video, we will be looking at what is Forex. Just in case you've not heard about Forex or you were coming into the market as a brand new trader and want to learn the right way of trading, then you are in the right place. I will guide you through all you need to become a profitable trader in the Forex market. I understand some of you already know about Forex and some don't. For the benefit of those who do not, we will start from the very basics of what Forex is, how to trade and how to earn. So guys, stick around while we proceed into the beginners course. Okay guys, welcome back to Riti Trade Hub Forex Beginners course. Firstly, we will be looking at what is Forex. Forex is an acronym that stands for foreign exchange. The foreign exchange market is usually known as Forex. The global virtual financial market allows exchanging one currency pair for the other. Basically, it is the largest and most liquid financial market in the world as it records a volume of over $6.6 trillion worth of transactions daily. In a quick search here, we can see that Forex daily trading volume totals around $6.6 trillion per day, as reported in a survey by Bank for International Settlement, that is the BIS. This implies that $6.6 trillion exchange hands between people from all over the world on the Forex market daily. Okay, this is the biggest opportunity presenting itself daily for you to milk Forex. Okay, the Forex market can be volatile and unpredictable, which is why it is important to do your research and risk management before you start trading. The foreign exchange market is so liquid that it can change your fortune around in just few weeks of trading, right? Before we go any further, I am going to be 100% honest with you and tell you this, like 100% honest, and you need to hear this, okay? All Forex traders, and I mean all traders, lose money on trades. So before you consider trading currencies, you need to understand that it is common for traders to lose money on trades. In fact, a large percentage of traders, up to 90%, experience losses due to a lack of proper planning, education, discipline, and appropriate money management strategies. So if you hate to lose or you are a super perfectionist, you will also probably have a hard time adjusting to trading because all traders lose a trade at some point or another. So you would think traders all over the world will be highly successful or highly profitable, but the reality is that only a small percentage of traders achieve lasting success. The problem is that many traders enter the world of Forex trading with the misguided hope of making a large amount of money, but they often lack the discipline and dedication needed to truly learn the art of trading. So guys, without these qualities, it is unlikely that you will succeed or those traders will succeed in this highly challenging but financially rewarding field of trading. And it's important to have a strong foundation of knowledge and discipline in order to achieve success in these demanding pursuits. So if you are wondering about what Forex is and how it works, don't worry, I'll be covering all of these concepts and more in this channel. Ensure you subscribe to my channel and turn on post notifications so you never have to miss any of my new content. Now that you have an understanding of what Forex is, let's briefly discuss Forex trading in layman terms. Okay, trading literally means exchange. Forex trading simply means exchanging a currency pair with another currency at a specific period, a specific price, and at a specific time. Basically, Forex trading is a process of speculating on currency prices to potentially make a profit. Currencies are traded in pairs, so by exchanging one currency for another, a trader is speculating on whether one currency will rise or fall in value against the other. Now, with the passage of each second of the day, the price of currencies fluctuates, and with every increase or decrease in the price of currencies, there are windows of opportunity to make money, either by buying or selling the currencies against each other. You can take advantage of the constantly fluctuating exchange rates and make profits as the exchange rates change. This is what we call trading. So let me explain to you guys what we are actually doing in Forex in very simple terms. Just follow me here closely. Let me use this analogy to explain better, okay? For those of you who are not Nigerians, I would use two names in this brief analogy. I would prefer to use President A and President B. Let's say President A is the former president of Nigeria and President B is the current president of Nigeria. Now let's get to the analogy so as to understand in a layman's way how Forex actually works. When President A was in power, dollar was at a time around 180 naira to 220 naira. Let's just take the average and say 200 naira. And when President B entered power, some of you would recall that around 2016, at some point, dollar shot up to 500 naira per one. Okay, assuming you knew dollar would appreciate against naira like it did in 2016, and you had 2 million naira lying fallow in your bank account, okay, you knew from your experience as a forex trader that uncertainty in government weakens a currency pair, and then you use this your 2 million naira and bought dollars at the rate of 200 naira and kept in 2015, right? It will give you about $10,000, right? That is $10,000 at 200 naira equals 2 million naira as at 2015. So this implies that your 2 million naira is worth $10,000, or your $10,000 is worth 2 million naira. Now let's assume you decided to save this $10,000 in the bank till 2016, right? Now 1 year later, dollar just escalated to 500 naira per dollar, and you went to the bank, cashed out your $10,000 and exchanged it back to naira at the rate of 500 naira. Very simple. Your $10,000 at 500 naira would now yield you 5 million naira. Remember, you just took 2 million naira. That means you made 3 million naira profit, right? Now ask yourself, did you use that 2 million naira to do any business? The answer is no. You practically did nothing. What just happened here was Forex. You leveraged on the fluctuations in the price of dollar to make yourself money without doing anything. You just sat at home while the foreign exchange market did the job for you. Guys, this is basically what we do in Forex. You will notice that you didn't really buy or sell any real commodity to make money. You took advantage of the change in exchange rates to make money. So guys, this is just a simple analogy, right? In forex market, it's even more interesting because they happen daily. You don't have to wait for 1 year or months to make money. These currencies are constantly fluctuating in minutes, what I usually refer to as volatility. So it's those opportunities caused by these fluctuations in the price of one currency with respect to another that forex traders make their money from. Okay, trading forex online has many benefits. You can trade forex from anywhere you have an internet connection. Aside from its size, the market also rarely closes. The currency market offers nearly 24 hours of seamless trading, starting on Sunday until Friday. I will elaborate this in my video on trading sessions and best time to trade. So make sure you like and subscribe to my channel so you get notified when I post a new video. More so, you do not need a huge budget to get started, okay? As little as $150 is enough to begin trading and building your account over time. Of course, it will require some learning until you get there. But this is exactly what Reality Trade Hub is here for. This is exactly what I am here for, to help you navigate your way through the forex market. Okay. So after the question of what is forex, okay, someone would ask what is traded in forex. The simple answer is money, specifically currencies. Okay, this is not your local market in any part of the world you are. In forex market, what you are trading is called a currency pair. Okay, although commodities like gold, oil, silver are also traded in forex, but for the purpose of this course, we'll pay attention to currencies or currency pair, right? Like I explained in my previous video, ensure you have watched it if you have not. Okay, forex trading is the buying of one currency while simultaneously selling another currency. These currencies expressed in pairs are always connected to each other. Basically, currency pairs are the main instruments traded in the forex market, and the knowledge of the currency pair will also guide you in executing your orders, right? So let's head to the screen. Now, each currency has a standard 3-letter code. So the first thing you need to understand is what each 3-letter symbol represents which currency. Okay, know that currency symbols always have 3 letters, where the first 2 letters identify the name of the currency and the third letter identifies the name of that country's currency. usually the first letter of the currency's name. Okay, let's take JPY for instance. JP stands for Japan, okay, while the Y on the screen stands for yen. So the first two letters identify the name of the country, Japan, and the third letter identifies the name of the country's currency, yen, usually the first letter of the currency's name, which is the Y. Alright, then the next we take the NZD for instance. The NZ stands for New Zealand, while D stands for dollar, okay, which is the letter of the currency's, the first letter of the currency's name, dollar. Okay, the price of the currency is usually a direct reflection of the market's opinion on the current and future health of its respective economy. Don't get confused yet, okay? You understand as we proceed. Now in forex trading, when you buy, say, the United States dollar, you are basically buying a share in the US economy, okay? You are betting that the US economy is doing well and will even get better as time goes. So let's take a look at this, okay? These are some of the list of major or popular currencies traded in the forex market with their abbreviations and full meanings, okay? As you observe on your MT4, it's mostly written as their abbreviation, so you can familiarize yourself with these abbreviations so you do not get confused when you see them on your trading platform, right? Now remember, in the forex market, currencies are traded in pairs, and they are often called what? Currency pairs, because they are traded in pairs. So what is a currency pair? Currency pairs are just that, individual currencies that are paired up. So currencies, like I said earlier, are traded in pairs as their value is relative to one another. The euro, for example, only has value if compared against the value of another currency like the US dollar, okay? That is why currencies are traded in pairs and not as single currency. So let's take a better look at the currency pairs and see which categories they belong to, okay? There are three main categories of currency pairs, right? Sorry. We have the major currency pairs, we have the minor currency pairs, we have the exotic currency pairs. The minor currency pairs can also be referred to as the crosses, okay? In some books you see them as the crosses, right? So if you look on the chart in front of you, each of these pairs are made up of separate currencies, right? The currencies included in the chart above are called the major currencies, okay? We have the Euro USD, we have the GBP USD, right? These currencies are traded in pairs. The euro is a single currency, USD is a single currency, that is the United States dollar is a single currency, and they both come together to make a pair, okay? So they are referred to as the majors because they are the most widely traded ones and represent some of the world's largest economies, okay? The majors are made up of the US dollar and one of the major non-US currencies such as the euro, the Japanese yen, and the British pound. So as you can see on the screen, these pairs have the USD as either the base or quote currency, okay? Don't panic. As we progress, we will understand the term base and quote currency. All right, to keep things simple, we just consider all 7 currencies as the majors, okay? Now we also have the crosses, right? The cross currency pairs, okay? These cross currency pairs are any currency pair that doesn't feature the USD, and they do not hold any less profit potential than the majors, right? So as you can see, here are examples of some popular crosses, and these pairs do not contain the US dollar, as you can see, okay? We have the Euro GBP, they do not feature the US dollar in the pair, the Euro CHF, and all of those, right? Remember when I was introducing the categories of these pairs, I said they are either called the minor or crosses, okay? So these are the cross currency pairs or the minor currency pairs. So the next are exotic pairs, okay? The exotic currency pairs are pairs consisting of one major currency and the currency of a developing country, and they are usually less traded, okay? So these are examples of some exotic pairs. All right, we have the USD SGD, that is the Singapore dollar. We also have the USD HKD, which is the US dollars, and the Hong Kong dollars, okay? So guys, there is another list of pairs that I did not outlined when I was listing the categories of the currency pairs. Okay, these pairs are highly correlated to certain commodity prices. Okay, example of commodity pairs are the AUD USD, the USD CAD, the USD NZD, right? Generally speaking, the AUD USD and USD NZD correlate with gold prices, and the USD CAD, USD CAD correlates with oil. Okay, don't get confused about correlations. Okay, as we proceed, we'll have a course that will cover that. Okay, now with that being the case, if we have a currency pair, okay, say the Euro USD, this is how you're always going to look at it. The first currency within the pair is called the base currency, while the second currency within the pair is called the quote currency. Okay, an important thing to note here is that the base currency is always stronger than the quote currency, with few exceptions. Okay, there are occasions in which the second currency are written as the second pair, right? The examples include the NZD USD. Okay, in this pair, US dollar is stronger than New Zealand dollar, right? And in the second example, the Euro GBP, okay, pound is stronger than euro. Now, when you see these few exceptions, don't bother too much about why the weaker one is written first, even though it's quite glaring that the quote currency is stronger than the base currency. What you just have to do is to take note of them. Okay, it doesn't affect your trade, it's just for the knowledge sake. So Euro USD in this example, euro is the base, right, while USD is the quote, because the euro is stronger than the USD. Also, in your MC4 or trading view, beside each of these pairs, you will see some set of numbers written by the side like this. The actual quote you see on the screen is your quote pair. Okay, now while the base pair is equal to 1. Now, from what we have here, okay, this implies that 1 euro is worth 1.0609 US dollars. Okay, the USD here is the quote currency, while the euro is the base, which is equal to 1. Now let's head to the chart and take a practical look at what I am talking about. Okay, as you can see here, the euro dollar has a value of 1.0609. Now that is the quote pair valuation of the value compared to the base currency. Okay, that number is telling you how many units of the quote currency you would need to get 1 unit of the base currency. Now, don't let this sound too confusing. Okay, one thing you need to know about a currency pair is that every base pair, as in the first pair in a currency pair, always have a value equal to 1. What this means is that if I have 1 euro, I essentially have $1.0609. Another way to look at this is it takes 1.0609 USD to make 1 euro. Okay, so let's take a look at one more pair and try to go over this one more time to make sure that you are getting it. Okay, and I'll ask you some questions while I do this to help you to better learn. So let's go for the dollar yen. Okay, so the US dollar with the Japanese yen, which one of these pairs is a base pair? Is it the dollar or the yen? Let me know in the comments section. Hopefully you said the dollar, right? With the dollar being the first pair in the equation, that means it is the base currency of this currency pair, and the yen will be the second pair in the pair. Now, with the USD being the base currency of this pair, its value will be equal to 1, and the quote pair value will be 132.06. Okay, and let's take a quick look at this on the chart. On the chart here, the yen has a value of 132.06. Okay, this means that 132.06 yen is equal to $1, or you would need 132.06 Japanese yen to be able to obtain $1 US. Okay, another thing you need to know is that the first currency or the base currency is the controlling one in terms of placing your order. So if you see USD JPY, then you are always choosing to buy or sell the first currency USD against the second currency, the JPY. Okay, the knowledge of the currency pair will also guide you in executing your orders. For instance, buying a currency pair is the same as buying the base currency while simultaneously shorting or selling the quote currency. By the same token, selling short a currency pair is the same as selling short the base currency while simultaneously buying the quote currency. This implies that if you think that the base currency will go up in relative value while the quote currency will go down in relative value, then you should buy the currency pair. If instead you think that the base currency will go down in relative value while the quote currency will go up in relative value, then you should sell or short the currency pair. Okay, so guys, that was a quick overview of currency pairs and how they work. I hope this video has helped you understand currency pairs and how they fit into the picture. I'll see you guys in the next lesson, where I'll be talking about important forex tools you need to begin your journey as a profitable forex trader. Hit the subscribe button now so you don't miss out when I post a new video. Thank you for watching. Click on the like button if you got value, and don't forget to subscribe and share this video to your friends to get connected to what